Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, where you can find the link to the website in the description below. In President Donald Trump's second inauguration address, he promised a golden age of America. The new Gilded Age's pro-business policies include lowering the corporate income tax to 15%. This, coupled with strong economic gains and lower interest rates, should help the U.S. economy beat expectations in 2025. According to Goldman Sachs research, U.S. GDP is expected to expand at 2.5% in 2025, higher than previous guidance of just 1.9%. A brighter economic outlook should also benefit business development companies, or what we call alternative banks at Income Investors. They provide capital to small and medium-sized businesses to help them grow their operations. And John, could you tell us a little bit about why don't these companies use traditional banks?
Yeah, smaller to mid-sized companies like we're talking about typically generate revenue anywhere from $50 million to more than $100 million a year. Now, that might sound like a lot to you and me, but it's too small for the big banks. They could easily buy a company that small, and that's not what banks generally do.
In addition to being a lifeline for U.S. businesses, BDCs are also great for passive income investors.
Yeah, absolutely. Because of a federal loophole, BDCs pay little to no corporate tax on their earnings. In exchange for this carrot, BDCs have to legally distribute at least 90% of their ordinary taxable income to shareholders. This results in some of the biggest dividend payouts on Wall Street.
And one BDC that has been performing well of late is Runway Growth Finance Corp. They're traded on NASDAQ under symbol RWAY. John, what can you tell us about this BDC?
Well, Runway Growth is a specialty BDC company that originates and invests anywhere from $30 million to $150 million in primarily late stage and growth companies. Now, the vast majority of its portfolio, a whopping 99%, are secured by first lien investments. The remainder are in warrants and other equity-related investments. Its debt portfolio, 100% have floating rates. Now, it invests in the technology, healthcare, and information services, business services, financial services, and other sectors and industries. Now, as you'd expect, this BDC's objective is to maximize total returns by generating current income from debt investments and capital gains from warrants received with those debt investments. Since its inception in 2015, Runway has closed 82 transactions, funded $2.2 billion in commitments, and made 47 exits. Now, its current portfolio includes 40 companies with $1.5 billion of assets under management.
And I think it's important we note that an investment advisor is being acquired.
Yeah, it will have a material impact on Runway Growth. Back in October of 2024, Runway Credit Capital, which is the investment advisor to Runway Growth Finance Corp, announced it was being acquired by BC Partners Credit. That's the $8 billion credit arm of BC Partners. Following the closure of the transaction, Runway will remain the investment advisor to investment funds, including Runway Growth Finance. Now, the combined companies are expected to enhance Runway Growth's financing capabilities for a wide range of companies. Now, shareholders are expected to benefit from this increased exposure and access to a much larger number of investment opportunities.
Looking at its financial performance, Runway delivered, and I quote in management words, another strong quarter.
Yeah, for the third quarter ended September 30th, 2024, Runway reported total investment income of $36.7 million. Now, that's down from $43.7 million in the same prior year period, but up from $27 million in the third quarter of 2022. Total investment income was $20.7 million, or 41 cents per share, a slight decrease from $21.7 million in the third quarter of 2023, but up 65% over the $12.5 million recorded in the third quarter of 2022. Now, during the quarter, the company completed 2 investments in new portfolio companies, 4 investments with existing companies, and 1 investment with a joint venture, representing $75.3 million in funded activities.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, looking at its dividend, this BDC paid a fourth quarter dividend of 40 cents per share.
Yeah, because Runway Growth has to pay out substantially all of its available earnings on a quarterly basis, shareholders on the receiving end of a reliable distribution. For the fourth quarter, it declared a distribution of 40 cents per share, or $1.60 per share on an annual basis for a forward yield of 15.18%. Now, keep in mind its pay will vary depending on its earnings.
And conservative Wall Street analysts expect RWAY stock to close in on record high.
Yeah, President Trump's business policies will be good for Wall Street for sure, but for Runway Growth Finance, analysts think its acquisition by BC Partners will also be a boon for RWAY stock. Now, since announcing the acquisition at the end of October, RWA stock has rallied, at least at this recording, an impressive 18%, and analysts think really impressive gains are in store. Of those providing a 12-month share price target, the average is $11.82 per share, with a high estimate of $13.50 per share. Now, the high price target of $13.50 would put it within striking distance of its February 2024 record high of $13.74 per share.
John, thank you so much for your insights. Just to recap, Runway Growth Finance Corp is a great BDC operating in a large and growing market for debt financing to late and growth stage companies. A whopping 99% of its debt is secured by first lien investment, and 100% of its debt is floating rate. In the third quarter of 2024, this BDC reported a strong financial results and also provided a strong fourth quarter 2024 portfolio update, which includes 7 investments in new and existing portfolio companies. Runway is on track to close its business combination with BC Partners in the first quarter of 2025, positioning it to deliver enhanced growth drivers for long-term returns. Further out, Runway is well positioned to benefit from current market and economic conditions as more late-stage companies turn to the private market for crucial capital needed to fund their next phase of growth. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.